Next up, I am thrilled to introduce our next panel is on Quantum Investing 101. So you got to hear from the startups yesterday. Today we're going to hear from the investors about the real deal and what's going on. So the moderator is Mark Danchak of Quantum One Group. And since joining his first startup in 1994, Mark's journey has taken him from tech startups to Wall Street and ultimately into venture capital. He has helped build mobile software and financial services companies. He is passionate about entrepreneurship, connecting the dots across technologies and business models, the value of diverse teams, and working with great founders who have a vision and grit to shape the future, which is all of you in this room, right? He previously was at Carbon 6 Ventures, Barclays Capital, Harbinger Capital Partners, Libertas, 24/7 Real Media, and All Point Software. He started working when he was 5, in case you were wondering. So please join me in welcoming our next panel, led by Mark Danchak.
Thank you. Hi, I'm Mark. I started when I was 5. So first of all, thank you, University of Maryland. The Quantum Investment Summit is an opportunity for us to get together, which has been few and far between of late. So my background is I do investments in deep tech. I got interested in quantum technology 6 years ago and started investing in different companies in the space. Invested in several of the companies in this room. And you know, I think it's an incredibly important industry. It's an industry that has the potential to impact virtually every vertical that's out there. And when I started to do my research, I was intrigued because people who are at great universities around the world, Stanford, Caltech, Maryland, others, that I interviewed to say, what's going on with this industry? They said, well, it's interesting you're coming to me now because I'm actually leaving my tenured position to go work for Google or Rigetti or wherever they were going. And these are dream jobs that people have. And so I said, I have to pay attention to that industry. And so I've invested in a large number of companies in the space. It's an educational process that I've gone through to get there. And the journey has brought me in contact with amazing people. And some of those people are joining me here on the stage today. So we'll just go down the line. We'll let them introduce themselves as investors in this space, as interested parties, as partners to the companies that are in this room and beyond. So we'll start off, Chloe.
Sure, thanks, Mark.
Yep.
So hey, everyone. My name is Chloe Holzinger. I am from The Engine, which is a venture capital firm that spun out of MIT about 5 years ago. We're based in Cambridge, Massachusetts, and we invest in pre-seed, seed, and Series A companies. Primarily, you know, those founded by tough tech entrepreneurs who are looking to commercialize some type of groundbreaking transformational technology that they were working on during their research at university. What else? Most of our investments have been in climate, human health, and also advanced systems and infrastructure. So we've made one quantum investment to date in Zapata Computing. We led their seed round several years ago. And we are always looking for new things. I'm coming into the quantum world from a battery background and climate. So I'm very happy to be here with you all today.
David?
Yeah, thank you. I'm Dave Moehring. I represent Cambium Capital. So we're at seed and Series A, kind of vintage series venture capital fund that does really all things future computing. So like kind of as crazy as quantum on one end of the spectrum and as less crazy as like special purpose ASICs and other silicon devices on the other end, and kind of everything in between. We have made 2 investments in quantum computing into In-Q and to Seek in Elmsford, New York. I actually came into venture capital accidentally. My background is a PhD in atomic and optical physics. Did a postdoc at Max Planck Institute, was at Sandia. And then my position in Sandia pulled me into the federal government. So I actually worked just about a mile away from where we're sitting now at IARPA, where I was a program manager for about just under 5 years and funded 60 different quantum computing research groups in 10 different countries around the world. So I had a lot of visibility into what was going on there. IARPA is a temporary position. When I left IARPA, I left the government entirely, and I was the first CEO of IonQ, which is a half a mile that direction. And so my commute didn't change too much. And then when I was at IonQ, I built out the team to the first systems, the first 30 or so employees before handing the reins over to Peter. And I think we've heard enough about IonQ probably the last couple of days. So we'll
Help their stock
leave it
price.
at that.
Great. Hi, everyone. My name is Zheng. I'm with In-Q-Tel. I'm happy to see our name on Andreas's slide there, even though we don't advertise many of our investments, because we are a 20-year-old strategic investor set up by the CAA, and our job is to really look out for new technologies that could benefit the U.S. government, especially ones in the intelligence and national security. We invest in very broadly in almost everything, from early stage Series A and sometimes Series B, in technologies that range from hard tech such as quantum, microelectronics, semiconductors, to enterprise software, cybersecurity tools, and even biotechnology. So anything that you think we should be doing, we have been doing that. We're one of the most prolific investors out there that we don't necessarily talk about because we don't announce many of our deals. Some of them are. I think our deal with Rigetti is announced. Other ones are not, but we are a major investor in almost every single hardware company out there dealing with quantum. I think different from some of the other venture capitalists, so we are strategic in the sense that when we make an investment, we have an eye towards the technology, which is kind of where I stand, and how it affects our customers and the government. So a lot of it's for situation awareness, especially when you're talking about quantum, which is somewhat early. I think that the goal there is to make sure that we are involved, our customers are involved, and understand the trajectory of where things are going, and what better way to do it than to kind of work hand in hand with the companies. When we do investments, it's not necessarily just a check and say, hey, good luck to you. We're very involved in the sense that we actually do bring government problems and challenges to the company with a directed investment. And so, kind of think of it as, if I had enough money and I wanted my name on, on campus, to say, hey, here's a donation, but I would love to have this, my name on this building. It is somewhat like that, where we say, this is a great technology, but can you do this problem set, right? Can you actually work on this workload? And maybe let's do a demonstration. Here's $1 million, $2 million to get that on the way. We'll connect you with a government customer to actually start to do that. So those are kind of the relationships that we try to look for with an investment. So we kind of make sure that we are effective with our dollars. My background is I have a PhD in electrical engineering from UC Santa Barbara in photonics. Kind of came into this accidentally too, I think, as most of the venture capital folks do. I supported DARPA for about 6 years, so did a lot of microelectronics and RF, the directed energy programs over there. I did a stint on Capitol Hill supporting a senator as a science advisor for economic development. Started getting involved in how do we actually promote R&D and transition R&D into the broader world so that actually could be consumed and used by the commercial sector. Found my way to In-Q-Tel, where we kept doing that. I primarily invest in quantum and microelectronics. Today, I find those very similar fields, or kind of one's a little bit more mature than the other, but similar problems with large infrastructure costs, large potential impact on society, and large players globally all working on it. And so kind of I'm trying to figure out, are there lessons learned that we are learning right now from how much money we should be spending in microelectronics to what we should be doing in quantum, and we get ahead of that and not fall into some of the pitfalls that we have seen in the semiconductor industry right now.
So I think the whole industry, from an investor standpoint, finds itself in an interesting moment right now, right? When I started investing in these companies, Rigetti, I think I've co-invested with everyone on this stage, or at least their firms. We were looking for the opportunity to get in early, to understand and to learn in the industry, and we're able to thankfully make some good investments in those areas. But now, fast forwarding a few years, the company, the stage of investment now is in a newly developed area. So now we find ourselves in a small handful of companies getting large amounts of funding. So you almost have this barbell effect that's going on in the industry. You have a lot of funding going to a few companies. It's not dissimilar to other industries, but it happened very fast here. And then there's a number of companies on the other end of the spectrum who are emerging. And so it's, from an investor standpoint, it's an interesting time of where do you put your capital? You know, we recently did the D round in Sci, but we're also looking at other things out in the space that are earlier rounds and beyond just quantum computing with sensing and communications as well. So I set that up to throw to you folks to say, where do you think we are at this stage? What's interesting to you and your teams? And how are you thinking about it through the lens of an investor? Whoever wants to start.
Maybe we'll go back down the road then. Since we are very broad, I look at everything. So in our strategy, we look at quantum not as quantum computing, but as quantum technologies. And just like Mark said, there are a lot of spillover effects that happen. And I think the data that was just shown in the last speaker, it really shows that the money, though, is in quantum computing. We're active in that. But from a strategic point of view, I think there are definite areas that we want to keep abreast of. Right? There are some things that are interesting in communications, quantum memory. There are some things happening in sensing, and some companies we're talking to that are interesting that though they are quantum-based, which is a very loose term, right? There are certain things you could use that for medical in terms of, maybe instead of an ECG, you could do MCG, which is a magnetic, a vectorized way of looking at heart movements, and which is one of those things that could be used in pediatrics because you can't actually sense a newborn's heart rate with an ECG very easily, but with MCG potentially could. Some of these new, nitrogen vacancy, diamond, sensors could potentially help you with that, right? There are some spillover markets from the sensing capabilities that are not always, PNT, position, navigation, timing related for the government, but there could be ones for others. So those are things that we're interested in. Different materials plays I think are interesting as well from a kind of critical supply chain shortage point of view. You were seeing that. I think the interesting thing for me right now is that there's such a broad type of quantum computing. You can make qubits almost out of a lot of different quantum effects, which is good because then you have a diversity of things. Right? You don't need to have the market on KTP crystals for down conversion. Right? You don't have to have the best foundries all the time. You don't have to have access to some of the other novel materials that you need first to generate other qubits because we don't quite know really where it's going to go. But it's important for us to understand each of those material criticalities, which is why another areas I think we should be investing in as well.
Oh yeah, sure. I can go next if we're going back down the line. So, as mentioned, as a fund, we just look at quantum computing in the quantum world. So certainly academically, I'm very interested in other quantum technologies. But as a kind of a narrow focus at Cambium Capital, we just look at the computing aspect. And I think that's where most of the money is going, as per the previous presentation, but also seems like to be the best fit, arguably from our side anyways, on the venture capital investing side, the largest returns possible. As said, I'm not a trained venture capitalist. I got here somewhat on accident, so I'll leave the finance discussions to my colleagues. But one of the kind of part of your question about like the acceleration of what's been happening in the venture capital and some of the funding world, it's interesting to see what's kind of played out over the last 25 years. So for the first 20 years of quantum computing funding, it was almost entirely from the government. In early days, kind of to your last point, early days, everybody with a two-level system's like, hey, we can build a scaled quantum computer. And a lot of research went into a lot of different groups over those 20 years. And over those 20 years, it kind of like narrowed down to a handful that have kind of outshined the rest for one reason or another. It's interesting to see that almost exact same trend play out in the venture capital world. So every two-level system now is getting venture capital money again and like kind of reinventing that entire ecosystem. And it's kind of getting narrowed down. So I've been on the government side and the venture capital side, and now we're seeing like kind of private equity and late stage investors. I doubt I will ever be an investor on there in that world, but it's interesting to watch how that plays out. I'm certainly no expert when it comes to how they make decisions about, how they make decisions about where their money gets deployed. But there's an interesting kind of history repeating itself, but much faster in the speed at which the money is being deployed into these companies. So, and again, as a scientist, as a recovered scientist, I'm very excited because You can't build these systems, and for 20 years it was just happening in like the sub-basement of physics labs around academic communities, and not bringing in the other experts in the different engineering disciplines. And that's what's happening in the venture capital world, that we're able to bring in those specific folks that we need to make the systems more robust, more reliable. It's happening not just in venture capital funded companies, but also in like companies like IBM and Google and some of the other large companies that are not quantum pure plays. They're bringing their deep benches of like very talented people to these problems. So.
Yeah, I think, building on what Dave just said, there's still quite a lot of really groundbreaking new developments happening in the sub-basements of physics labs.
Yeah.
So we talk a lot with those professors and PhD students and postdocs. And a couple weeks ago, I spoke with an MIT professor who found signatures of many-body localization in nanodots trapped within alternating layers of semiconductors, and just fascinating new discoveries in the spaces of quantum dynamics. So we like to engage a lot with those types of folks and professors, and work with them to see, is there technology here that you would like to commercialize? Is there a market need that this addresses? And we're still seeing really incredible research coming out of those university labs, both at the physics labs as well as the chemistry labs. So we're really focused on exploring some of those opportunities, and looking for the hardware solutions or sensing solutions or communication solutions that are going to be more transformational in the long term. One of the things that how the engine is differentiated from other venture capital firms is we have a very long fund life of 18 years. So we are structured to support tough tech entrepreneurs that maybe need a little bit more time beyond 10 years to commercialize their technology. So this has gone well for us for other different types of technologies and companies that we've invested in. I think we wrote the first check for Commonwealth Fusion Systems, which is looking at magnets for fusion power. And that was about 4 or 5 years ago. So this kind of long fund life and focus on commercializing academic research has really been the thread that's gone through all of the engine's portfolio companies. And we still see plenty of opportunity in quantum technologies at really every level.
I love the team at Commonwealth, by the way. I met them a few years ago as well. So now with this large amounts of fundings going to these large rounds, and it's mostly, as everyone has recognized, to the hardware players, we're getting to the stage where applications are hopefully going to be taking root and growing at this in the near future, right? And so from that side of things, I'm vice chairman of the use case group for the QEDC, and we are actually just kicking off a study of what all of the global use cases are and algorithms and business use cases that people are developing and working towards. And the reality is that we're still very early in this effort, but for the companies that are out there leaning in, the large Fortune 500 companies that have a sense, they don't know, but they have a sense that quantum is an impactful technology. It's a set of technologies that they have to understand, and they're learning to build their muscles now. And in partnership with some of these emerging companies on the application side of things, do you folks see opportunities where there's the early, we're co-investors in Zapata and others that are out there, but do you see opportunities in other application areas where subject matter experts, corporates are coming together to explore in a business model that leverages all of this money that's been going into the hardware side of things, now is going to start to shift towards applications, algorithms, and the development of companies in that area? How do you guys look at that?
I think for applications is one of those things that we and folks that we work with, are struggling to figure out what are those applications. I think, just be honest, like I think, it's not clear yet. Even for folks in the government are trying to figure out what do I use this for, because they have many tools at their disposal. And I think what's telling is, I was on a panel last week at a supercomputing, HPC kind of panel, and we were talking about AI accelerators, which is another area is getting a lot of money, right? This is nearly $1 billion into these accelerators that do a very narrow slice of ML, right? And then the argument was, and these investors were in data. These were data investors, and they're not hardware guys. And they're like, I don't quite care about that hardware. Like what's happening in the data side is that it's not that I need something that could crunch numbers really, really fast. Is that I'm looking for a needle, and the haystacks keep getting bigger. So I need a way to triage my data so that I could get to that thing better. So if something helps me with that, and it's not a supercomputer, then it's fine. That's what I need. So I think the relationship, the folks that actually use hardware. The relationship is, how do I make my job kind of easier? And then the way that they see data moving is in the heterogeneity of it. It has to be working. It's going to be either an SQL, or it's going to be in some SAP, or some different structure. And that structure is going to be different across different customer groups. So the hardware needs to be able to do all of that, right? And so that's a lot to ask for some of these AI hardware accelerator companies that we're investing in. We're asking them, can you do this? Can you do that? And they say, well, we're going to have to tweak our kernels. We're going to have to do this. If imagine asking that to a quantum computing company that it hasn't even figured out yet exactly how to connect to the cloud and get a workload on it that's not more maybe like a chemistry or a materials-based workload. So I think we're still a little early, but I think that's the right question to ask, because if we don't have a kind of a goal of and not searching for that, then I think we can be stuck in looking at these toy examples that actually work really well for certain quantum computing, but it doesn't serve the community a good benefit, because we need to step out of that eventually, right? When money starts to dry up and you need to start finding actually commercial customers, right? You need to be able to show, hey, it can do this very well, where we could optimize this for this application. And that customer discovery, I think, many of the companies we're talking to are doing that. They're talking to different folks. We're encouraging them to find out what those are. We're trying to do that with ourselves, with our government customers on figuring that out. But I think this is still a kind of a work in progress, but necessary.
I'd agree that, you asked a question offline about where are we in the baseball analogy. It might be later innings with regards to hardware development, but it's still very early innings with regards to application development, especially with a focus on the end user and how they're going to use it. The machines were, just frankly too small to get anybody too excited about what they could do over the, until quite recently. And there's a lot of algorithms out there on the academic side that show promise, but it's not good enough for an academic to say, this is a really interesting problem, end user, you should take this seriously, because the end user doesn't care what you think is important, they care what they think is important. And building a machine to optimize something that they don't think is important is not a good strategy. So I'm heartened by the companies like Zapata that you mentioned, and then the others, QCware, 1Qubit, et cetera. There's a number of these that are growing. Very excited that they're getting out there, starting to connect the end users to the actual hardware teams. And then the hardware teams themselves are also growing up that in-house capability to understand how to match those better. Because quantum is a limited resource. Quantum computers are a limited resource at the moment. So how do you squeeze out every bit of capacity out of those machines to start to show not just a problem of interest that can be published, but a problem of interest that really changes the way that these end users might update their critical path, computing approach.
Yeah, I think, we in general invest in a lot of platform technologies rather than necessarily particular products or applications. We want to see that a technology can be applied to address, a wide variety of different use cases, like Zapata does, rather than just, one specific particular need. or optimization problem, or drug discovery issue. And so through Zapata, we've been able to, they work with a variety of different types of hardware companies. So we've been able to get a better sense of the different types of hardware options out there. But I think it's still, as my colleagues here have said, and we've been talking about all week, it's still really the very, very early days. And we do need champions within these different corporates. We need champions within government who are able to speak to the needs of quantum and speak the language between government or corporate and the quantum scientists. And having that middle group of people is really, really critical at this stage. And we seek to play some part of that role. But to Worley's comments at the beginning, and everybody who's echoed it since then, it's really a collaborative stage right now. Need as many champions as we can get.
Yeah, for sure. And then I think the government's becoming more educated, corporates are becoming more educated, boardrooms are asking the question, hey, I read about IonQs going public. What are we doing with those types of technologies? It should impact our industry and so forth. So I do think that is a very important point. It's definitely in its growth stages. If we look at the pace of investment, as we've been saying, it's been speeding up. When you look at the types of companies that you want to invest in, for the folks in the room who are on the corporate side or on the small company side of things or large company side of things that are looking for investment, has there been any change over the last 2-3 years in what you're looking for as an investor in these companies?
Yeah. Yeah, it definitely has been. And I realize that the last round, I think we started in very negative. We are in a quantum investment kind of conference here. And I do want to say that to round that out, though I think from the hardware level, if you're just a hardware player and you're tasked with making good hardware that people can use, and then also go out and find people and then find software folks. I mean, that's a lot to ask, right? Especially of a quantum company, which for us is why we are starting to look up on the stack. I think this is great that you guys are in Zapata. Those are great guys. And I think that's the optimistic part of things, right? I think if you were just in the hardware space and you think you had to do it all right by yourself, that's just going to be a very tall order, especially in terms of money and resources. And we haven't even got to the labor issue, which I think hopefully we get to later, because I think that's a big challenge here. But I mean, if you look from the top of the stack down, now there are opportunities that there are folks playing in the software platform and kind of layers above it. You had Worley talking, you had Zapata, there's QCware, they just got a Series B. There's a lot of folks kind of in that space that could help bridge the gap between a commercial application and utilizing hardware. Now that a lot of these hardware is actually on the cloud through Bracket or Azure, I think there's some more opportunities. So I think there are definitely opportunities optimistically looking at that. As long as there are tools that can get folks in JP Morgan who aren't quantum physicists, right? Who are quants but don't have a physics background, and they look, I just want to do Black-Scholes and I want to do it fast. How do I know the equation that I want to do, and I have the data set. How do I do it on this thing? And by the way, I don't want to change the way I program. I've been using CUDA or something like that, and I just want to be able to plug it in, right? If there's a middleware or something that could help bridge those gaps, then I think we could start to enable some of the hardware technologies, and so getting out of this funk of like the bottom layer needing to do everything. So we are looking up on that higher stack and see if there are enabling technologies that can pull some of that hardware up to be more usable and to kind of abstract away some of the difficulties. And I think you're seeing that right now in the fact that a lot of them are cloud-based. A lot of customers don't want to have an on-prem system just yet because it's a lot to manage, right? Like then you have to hire someone who actually knows how to like fix the machine, right? And so at the beginning, if we're just trying to figure out how to use these things, I think democratizing it in a sense, trying to making it applicable, that's a good way to do it. Once people find out how to use it and how it could create an advantage for them in the marketplace, then I think you see people kind of putting it in-house and doing some things they could do themselves. But I think the opportunity is moving up the stack, but linking it, not just saying we're done with the hardware. onto the next layer, onto the next layer, right? There has to be that linkage. And it's going to be unique because some of the hardware, the software is going to be unique, right? Like, so those are the kind of things that we're looking for now.
Your question about like what has been a mindset change around investing? I think one of the things that's changed, since I started at In-Q is there's a lot more discussion around companies merging than there ever were before. It's obviously always in the back of everybody's mind, like what is the long-term plan of this company? But I think there's a lot of investors now that are looking at startup companies now with an eye towards merging. And I think it's because, as you mentioned earlier, the barbell of funding of the small companies and the large companies, there's more of ability to like kind of bring some of these parties together. And as you say, like whether they're under one umbrella, one company, or whether they're working together independently, is important. But I think you're starting to see a little bit more appetite for merging now.
Chloe, can I ask a follow-up just to that? Because I think it is an important point, right? Because of what's been identified as we are resource constrained in this industry, and pick any resource you want. We don't have enough engineers, we don't have enough physicists, we don't have enough algorithms builders who are literate in what to do with these systems. There's not enough chip people in the companies that we're investing in. And so for it to grow bigger, it needs that element of it, which does lead to the question of, if stage one was capital goes into a number of different companies in the space, started with the government, then transitioned to private investors, we're now seeing a bit of, feeding frenzy a little bit in the amount of capital that's now gone into the bigger players. And so you have big balance sheets and small balance sheets in the space. Is the next stage consolidation? Is the next stage just more investment sort of as it is in that consolidation? Because look, we all know that this is an important technology, if it's all right, for all of the cloud players that are out there. This is cloud 4.0, 5.0, 3.0, whatever that is, right? And of course, then that goes to the question of, is it all cloud, or does the US government get on-prem and other governments and so forth, but a whole bunch of different things. But as an investor, where do you see that, and is that play into your thesis of the whole industry at some point is probably going to consolidate just because of the rare, scarce resources? And it will probably be pushed by an advantage demonstrated by somebody that then will say, well, I need all of that. And that could be algorithms people, it could be subject matter experts who are building, companies in the software space. So how does that play into your thesis? Does it change anything? It's just sort of normal course, like every other business that's out there. What do you guys think of that?
Can I pick up? So, that's actually a part of our overall thesis at Cambium around not just quantum, but high performance future computing in general, is that there's a lot of, like the cloud players and the large, compute users of the world, they can either or both, build internal expertise and try to build, a special purpose accelerator for machine learning inference or what have you, or they can watch what other companies do, smaller companies, and it's like an outsourced R&D, and if they really like what they do, then they can just pick them up and bring them in-house. Because a lot of cases, the large, like a AWS or an Azure, they know how to monetize that when they bring it in, and they know how to bring it in early before maybe that startup company is worth too much to be acquired. And I think that it's maybe a little early to talk about that for quantum, but it will happen. Consolidation will happen. Some companies will also start to go out of business, and this is something that we're talking about in the QEDC. About not every company ends up surviving in the long run. So how does a positive or even like a less positive acquisition and merger happen? So it's starting. There are a handful of acquisitions that have already happened. And you were involved in 2 of them early on when 2 of your own companies merged.
Yeah.
So maybe you should answer the question.
No, I asked the provocative questions. I know the answers already. I'm joking, I don't know the answers already. Anybody else?
Chloe, why don't you?
Yeah, I think, one of the things that I'm looking for from this space is just watching how investors and governments and other folks react to the companies that are now exited or exiting and publicly traded. Operating as a publicly traded company is entirely different from a private startup. And the amount of information that we can get from, you know everything about In-Q, but I'm bound to learn more now that they have quarterly calls and are disclosing lot more information to investors. We saw that same kind of trend in the battery companies that exited within the past year. QuantumScape has been announcing tons new technical advances and publishing a lot more actual performance data than they were when they were a startup. And so watching how the markets and corporates and governments react to that new information from these current industry leaders, I think is going to be extremely helpful in understanding consolidation opportunities or future exit opportunities or what actually is needed in the space at a technical level.
Yeah, no, I think you're absolutely right. I think we just don't know what the forcing function that's going to be to cause consolidation. Which is why we do invest in so many different choices because we want to have that visibility. I think sitting on boards helps really figure out where some of these pain points are creeping in. I think one thing that as a kind of watcher of what happenings in the government, I think what the monies from the White House initiative that's and what QEDC is doing and some of the nation state level activities around the world, that's going to have a big impact. Again, I draw from the microelectronics industry where we see the U.S. move away, not just because of labor, which is what everyone used to think, but a lot of it's just environmental constraints, right? Like Santa Clara in California has the highest density of Superfund sites because they were not good when we first figured out how to make semiconductors. It was just HF everywhere. There's a lot of dangerous chemicals. They didn't figure out how to clean it up. And said, well, it's easier just to ship that out in China, have them deal with it. And then now, as we have better safety protocols and stuff, let's bring this back. Let's do this in the U.S. We could do this now. It's all automated. And I think that trajectory of kind of moving things overseas, losing a lot of the ability to in the workforce and kind of that has for me, I'm looking at from the quantum side. There are different technology. We need photonics folks. If you want to play in the Xanadu and site quantum field, we need quantum physics folks in terms of the atoms. If you want to do atom computing, Quera. If you want to do In-Q, right? There's just so many different types of subsets, right? And there are U.S. centers of excellence, around the nation. But if you then look above that, what are the infrastructure needs, right? There are some NNMIs, the National Manufacturing Institutes, that might be able to help, right? Maybe the new CHIPS Act might be able to help for semiconductors on the outside for people doing superconducting circuits, right? But might not be as helpful for the ones doing photonics. So I think looking at some of these broader government level initiatives and seeing where those infrastructures and monies can be leveraged is helpful because the other countries are doing it too, right? Like the Chinese are putting a lot of money in certain technologies, and they're not necessarily they're actually picking some of the ones that they think are going to be pretty good. So I think we just have to be mindful of where that's going to be and kind of pick and choose some of the areas that we think we should definitely hold on to.
And then as investors, our job is to take risk and to take the best risk-weighted decisions that we can. And of course, at the bottom of all of our fundraising documents, it says past performance is no indicator of future performance. But on that note, if past is prologue, how do you think about the pace of valuations that have happened in the last 2 years? Is it something that is surprising to you, is normal course of business, you expected it, not as high as you thought it was going to be, not as broad as you thought it was going to be? What's the context there? Because that could be informative to this next stage of things. Because I think there's a lot of negativism in the space because it's complex, it's opaque. You can't just, there's no sort of traditional venture rubric where you do pattern matching and you figure out which is going to be the next great home run. That just doesn't work in a deep tech space like quantum. So you have to be well informed and all that. But just on the pace of valuations, how do you think about that? And then how do you think about that as, in this next stage, these next 3, 4, or 5 years?
Yeah, I mean, I think this is something that we've been experiencing across our portfolio, whether you're talking about energy storage companies or quantum companies or vaccines. And I think, on one hand, that means that if you're a startup, if you're thinking about starting a company, if you have never been a first-time entrepreneur, first-time founder, there's really no better time to start a company than right now. You're going to get much better terms than than any other point in venture capital history. So that's been helpful for us as we try to find new first-time founders coming out of the universities. I think on the flip side, concerning the valuations, a lot of that, in my opinion, is really investors reacting to, the need for these new technologies and the end of Moore's Law and, climate change and new pandemics. And all of this creating really a chaotic environment that makes corporates and entrepreneurs and investors really looking for, okay, these current systems aren't really working for us. What are the solutions to those problems? And I'm interested to see if those valuations end up coming to fruition, if these are actually the technologies that are going to help solve those problems. And I optimistically think they will. Or if we're going to see, maybe this is not that technology and there's still more to be done on the carbon capture side, for example. And we still need some more new technologies and new academic research in those realms. So I don't necessarily think it speaks to industry-wide, there's quantum valuations are too high. I think there will be some companies where they'll meet those expectations, but as with every industry, there will be some that don't.
Yeah, I'm not an economist, but some seem high. But I would just say, maybe I'll answer a slightly different question. Maybe I've lived in DC too long, and that's what we do here. But you just need to be mindful about how quickly you try to raise your valuation of your company. You got to think, several raises ahead to make sure that you don't get over your skis, you don't overvalue it, because you can get to a point where your company is valued too high, and then it makes it hard to raise the next round of money.
Or merge, or have other options.
Yeah,
Yes.
And it could also, like if you raise a valuation too high and your goal is to get acquired, you might make your company so expensive that your most recent investors can't make a return on their most recent,
Yep.
on the last round. So you've got to be very mindful, not just in the earliest stages. And I find it like in the hardware space, at least, the earliest stages are still kind of reasonably priced compared to like software. And I don't mean quantum specifically, I mean like kind of across the hardware and compute world as a whole. Hardware is still reasonably priced, and I think part of it is just because it's more capital intensive. And we know that there's more rounds coming, but there can still be a step change when things start to work that like the valuations can shoot up really fast. You just need to be mindful of it.
Yeah, I agree. I think quantum is one of those fields. It's hard to, you can't take, like Mark said, you can't take your the way that you would evaluate a software company, right, and look at what your potential earnings, what's your TAM, because those are a lot more realistic, right, than something when you're looking at quantum. Like you have to be optimistic about it, right? You have to believe there's something out there and that there's a way to this technology is going to address that market. Otherwise, you wouldn't be in this. You wouldn't be talking about this thing. And so I think a lot of that is how do we the sentiment analysis. I think that was done is right on track, right? That's one way to really look at where everything's going. I think the end of Moore's Law with close is absolutely right. Like I view quantum as like another ASIC, right? It's just a very, very, very difficult ASIC to make at this point. And we're looking for a heterogeneous world, and it's going to be in the next world. We can't use a CPU to do everything, right? We're finding out that it is perhaps cheaper to do it, a specific thing. If that market is big enough, I'll buy a specific machine or hardware to do that. Once we figure that out, maybe that is a quantum machine, right? Maybe something else. I think then you look at how much money is going to go into research, right? That takes 3 to 4 or 5 years for these grants to come through. Those are just starting to roll out from the last administration. So, I think we're going to still see a lot of money in the research field that's going to turn out to be, professors saying, hey, I got this off the ground, right? With government funding to do the initial kind of prototyping, I'm ready to go, right? So I think we're still going to see a few more years at least of new ideas coming out of the labs that needs to be transitioned. So I think right now we're pretty much stable. If you add the SPACs, we're higher than before. I think we're going to still be around the same area in years to come because there's going to be new ideas trickling through with how much money is still being put into it on the early side of the pipeline.
Got it. All right. Well, we're wrapping up now as I'm getting the signal. But anyways, it's an incredibly interesting time for all of the brave souls who are building companies. Keep doing it. We see lots of opportunity. There's great investors that are out there to do things with, and we look forward for you guys having a great rest of your day today. Thank you. Thank you, guys.
Thanks, Mark.